Okay, welcome. Let's get right into the stock market technical analysis. We're going to get started right away. Again, this week and next week, very light weeks. We're going into really vacation, holiday trading, super light, lots of whipsaw signals, lots of false breakouts, false breakdowns. So in general, I'm going to keep it light, and we'll keep, if anything major pops up, we'll keep an eye on that. But for the most part, I'm not expecting much to happen over the next 2 weeks. Triple Qs, we are trading pretty much right down to an area of key support. So you'll see here on this blue trend line here in 2021, we've hit support every single time, and see the trend line, and you can see we're pretty much in that area. Now, yeah, we could go a little bit lower. Maybe one of these days this week we'll gap down right to that area, but there's not much more to go to the downside. Maybe another % or so to hit that trend line. And yeah, in general, we need to see this break before any major short trade plays out. So we're pretty much at kind of a support zone, and without a break this is basically support. So if you're short, probably a good area to maybe lighten up or cover completely. You could flip long because we are at support. That's another option. I wouldn't want to remain heavily short until I see some sort of a break of this trend line right there. So that's how I'm playing it, lightening up. If you watch my video or the live session that I put out over the weekend, I was expecting a gap down today, and I talked about that. So when we opened up this morning on the gap down, I covered my short trades, took my profit, and I've pretty much been sitting flat on the market indices pretty much all day. So again, just area of support. If you look at the hourly chart as well, you can see we're starting to kind of put in some bullish divergence right there. It's not fully confirmed, but there it is on the hourly and showing up right here on the RSI. So again, what I'm trying to point out is, and it is confirmed there on the RSI, meaning we've got a new lower low in price, but a higher low in momentum than your former low. So basically, we've got some bullish divergence on the hourly chart, meaning, this is the area of support. This is where you're likely going to see a bounce. So no reason to be heavily short right in this area, especially after we got the gap down this morning. It was just a good idea to cover and until we see a break. If we see a technical break of that trend line, then we got bigger things going on. SPY, you can see gapping down right to support pretty much. Looks like we're going to close the day right there at that support level. Now, SPY could go a little bit lower, but we're probably going to fill a gap. We've got this gap right here. If I go to the hourly chart, you can see this gap is sitting there at about 459.56. So I'd look for probably a gap fill. You can see that it dipped down and they're recovering it. That's bullish in the short term. Looks like we're probably going to run up into a gap fill. So things to look for on that. Again, I'm not really interested in trading the SPY. Longer term on the SPY, you've got the daily chart. You've got this trend line right here. So we have support all the way down here. So I think we could come down to there, but the Qs is going to have to break its key level of support, that ascending trend line, for the SPY to come down to this area as well. So I would just focus on the Qs. Looking at Apple here, you can see Apple is pretty much right at that key level of 169.88. Now it is resistance. This was kind of former resistance here. Then it was support. We're below it, but we're just right below it. We're not really impulsively breaking down. So unless I see some sort of an impulsive breakdown, we could just be, trading below it and then recover it and then maybe make another run higher. We just don't know what's going to happen, but I'm not seeing impulsive selling in Apple. Clear negative divergence had been building. We did get, somewhat of a correction. You can see from the all-time highs, we fell about 8%. So definitely got that correction. Maybe that's all there is in this. We'll look for signs for more downside. But again, just to reiterate, I don't think it makes sense to be heavily short going into the close today. With that gap down, it was an opportunity to take profit, and that's what we did. Or that's what I did. So moving on. Gold. All right, this is gold bullion. The level that I have right now that I've been watching is about the 1790. And as you can see, it's been kind of resistance recently. We've got resistance reaction here. We finally broke above and we're coming in for a back test. So this is support. This is an area of support. I think it looks like a good area to add, or basically add to trades or add to gold for a move up to this level, 18. It's about 1832.91 as the next level of resistance. So again, I've got that marked out right there. Big level, and I think we're probably heading up there. So I like gold here. And let's move on. And the financials, XLF breaking down today. You can see basically XLF from the March 2020 lows. We have this uptrend line right here. And we broke. There's your sell signal right here. Kind of chop around a little bit, but gapping down and breaking down more. So it looks like we're starting a downtrend in the XLF. That should, I believe, be bullish for gold. The XLF typically moves on interest rates rising, and I think the market's really starting to realize that the Fed, although they are going to start hiking interest rates, or have signaled that they're going to start hiking them, it's a pretty muted hike. They're only anticipating hiking them 1.5% within a few years. So it's not really that bullish for the financials, and it is pretty bullish for gold. So in general, I like gold long. I like financials short. And I've talked about how these financials look like they're about, going to roll over. If I go over here, you can see they're all, just continuing to the downside. Here's Citibank. Looks like it backtest. Looks like it's running down to this key level of support here at about 55.30. And yeah, they all look like they're continuing to the downside. Ford Motors, this one, had a potential sell signal, but it's not really playing out quite yet. So you've got this upward price channel here on the daily chart. We broke once. It was kind of a false breakdown. But as I zoom in, you can see we broke again here, but they recovered on the daily and it closed above support. Today we gapped down, and so far we're below support and have not been able to recover that. So we'll see how this closes. If you get a daily close where you have it like maybe close down near the lows, we could probably consider that a sell signal. And then we'll look for Ford to trade down to 1650 key level support right there. So we'll see how they, what they want to do, if maybe they can recover it or not. It's not a super impulsive breakdown. Usually when you break a trend, you want to see a gap down and something that's really impulsive with increased volume. We don't really see that here, so not giving us a clean signal. Maybe this wants to just chop around sideways for a few days before actually giving us that clean breakdown. So we'll just keep an eye on it. And Qualcomm has a good short setup, not exactly actionable quite yet. So I had this trend line right here. We gapped up and we traded up here. We broke, but we still have this support right there. It's 171.39. So, I'd really want to see that break before initiating a huge short. I do have a starting short position on this, but looking for a break of that. And if we break that, I think we're going to run down a gap fill down here at 139.03. In general, I like the setup, although I need to see some more impulsive selling show up. Clear negative divergence right there. So that was a divergent high. That's a divergent high. Looks like we're starting a downtrend, but again, to add to my starting short position, I'd likely want to see this 171.40 break, nice impulsive breakdown, get an hourly close below that level, and that should set us up for continued downside to that profit target, 139. And that's that's basically a 18% drop, so that's pretty good. And then if we recover the trend line and we're trading back up in here, you could just stop out. And from here, that would be a loss of maybe 5%. So risk reward ratio is pretty good. A potential loss of 5% and a potential gain of 18%. So about a 3-to-1, a little bit more than that. Pretty good risk-reward ratio. And oil. So oil was selling down. Now you can see DRIP is a bearish inverse ETF in oil. So if oil goes down, DRIP goes up. And there's my target. We didn't quite hit it. They came in a little early, but 658 is where I had the target. And it basically hit right there at 643, which was gap entry. So you can see this little gap that we have right here, and there it is. So close enough. I'd say that you're likely going to get a reaction here. This is kind of key resistance, and I've got it marked out here. We had some reactions back here. We gapped. So you're probably going to get a pullback right in this area. And going to oil, here's oil futures. They failed to support this morning. So you can see this key level here at about 66.71. I've got it as resistance back here with support, little whipsaw right there, support right there. And, you know, again, it's volatile, so you want to look for slight moves, but they held support right there. So maybe that means we bounce up to the top of the range, 75.43. So I think that's probably good for drip, at least for the time being. Looks pretty good. The from the buy signal that we had, basically we got a buy signal right there on the November 17th, and this has moved up. It moved up a total of about 27%. So that's all I see in that one. And really, that's all I have for today. Just pretty light day, not a lot going on. So leave me a thumbs up, guys, on your way out. I'll catch you on the next one. Bye.